Ladies and gentlemen, the media often tends to use cliches like dream and big bang when it comes to the annual exercise that the union budgeted. But let me tell you that this budget might be the most significant one India has seen in many years. Why? Because unlike most budgets, this will actually impact your wallet and for once, even make it heavier. On this show yesterday, we had emphasized on the need for a complete rethink on the tax slab structure in this country. Not just rebates at the lowest end of the spectrum, but an overhaul of the entire structure which benefits the salaried urban middle class that our viewers represent. In a record 8th budget speech, Finance Minister Nirmala Sitharaman has announced revisions to the tax slabs, introducing a new 25% rate for incomes between 20 and 24 lakhs. Also, there will be no income tax payable up to 12 lakh rupees. In fact, up to 12.75 lakh rupees if you include standard deductions. The only catch is it's all relevant to the new tax regime. First, let's listen in to the Finance Minister.
Personal income tax reforms with special focus on middle class. Democracy, demography and demand are the key support pillars in our journey towards Vikasit Bharat. I am now happy to announce that there will be no income tax payable up to income of 12 lakh rupees. Average income of 1 lakh per month other than the special rate income such as capital gains under the new regime. This limit will be 12.75 lakh for salaried taxpayers due to the standard deduction of 75,000. Slabs and rates are being changed across the board to benefit all taxpayers. The new structure will substantially reduce the taxes of the middle class and leave more money in their hands, boosting household consumption, savings and investment. In the new tax regime, I propose to revise tax rate structures as follows. 0 to 4 lakh rupees nil, 4.8 lakh rupees to 4 to 8 lakh rupees 5%, 8 to 12 lakh rupees 10%, 12 to 16 lakh rupees 15%, 16 to 20 lakh rupees 20%, 20 to 24 lakh rupees 25%, and above 24 lakh rupees 30%. To taxpayers up to 12 lakh of normal income other than special rate income such as capital gains. I read that again. To taxpayers up to 12 lakh of income other than special rate income such as capital gains, tax rebate is being provided in addition to the benefit due to slab rate reduction in such a manner that there is no tax payable by them. The total tax benefit of slab rate changes and rebate at different income levels can be illustrated with a few examples. A taxpayer in the new regime with an income of 12 lakh rupees will get a benefit of 80,000 rupees in tax, which is 100% of tax payable as per the existing rates. A person having income of 18 lakh rupees will get a benefit of 70,000 rupees in tax. That is 30% of tax payable as per existing rates. A person with an income of 25 lakh gets a benefit of 1,10,000 rupees, that is 25% of his tax payable as per existing rates. Details of my tax proposals are given in the annexure. As a result of these proposals, Honorable Speaker, sir, revenue of about 1 lakh crore in direct taxes and 2,600 crores in indirect taxes will be foregone.
सभी आय वर्ग के लोगों के लिए टैक्स में भी कमी की गई है। इसका बहुत बड़ा फायदा हमारे मिडिल क्लास को, नौकरी पेशे करने वाले, जिनकी आय बंधी हुई है, ऐसे लोगों को, मिडिल क्लास को इससे बहुत बड़ा लाभ होने वाला है। मैं सभी देशवासियों को एक बार फिर इस ऐतिहासिक पीपल्स बजट की बधाई देता हूं।
We've heard from the Finance Minister, we've heard from the Prime Minister. Now let's hear from our experts who are joining us this evening. Monika Halan in the studio with us. She's an author. Thank you, someone who's an expert in personal tax. Thank you very much. We have Dr. Santosh Mehrotra, senior economist, joining us once again on the show. Thank you very much. And Professor Dipanshu Mohan is an economic affairs expert. He's joining us on the broadcast as well. Thank you. Thank you all three of you. Our focus for the next 20-25 minutes is going to be personal taxes and what changes for us. Monika, what changes for us? You know, journalists have a habit of saying path-breaking, dream budget, matlab, jitne adjectives we'll add.
Correct.
But what has today's budget done for our personal income tax?
I think at a very broad level, we should think that 1 lakh crore has been put into the middle class pocket because that's the tax revenue foregone.
Correct.
That's a large number. Okay, whether the middle class chooses to spend, save, do a combination, both are positive for the economy. Okay, so at a macro level, that's what's happening. At individual level, I think we've all seen what the rates. I don't need to go over it again. But what I want to read out one stat to you. The largest number of tax returns filed till now has been in the band of between 7 to around 12 lakh. Okay, so that's the band where you get the maximum number of returns, and the sigma of the taxes paid is also very large. Okay, so this is the part of the taxpayer who has really benefited hugely. The people who are in this tax band have benefited, and there are a lot of them. So in terms of a feel-good factor, I think it really puts the middle class, who was actually feeling very jaded because there hadn't been much increase in the slab rates or reduction in tax rates, and there has been freebies and cash transfers being given by political parties. So the feeling which was emerging in the middle class was, my money, you are giving cash transfers, behen scheme, makkan, whatever, you're just handing out money to people. It's my money, what am I getting? So I think that question has been answered to a certain extent to say, okay, you're a part of this narrative. See, the story is the rich look after themselves, the poor get free food, they get cash transfers. A lot of the people are outside of the tax net. Okay, so that's a very large number. I can talk about the numbers in a bit, but that's a very large number who persistently stay out of the tax net. So you feel like a donkey. I am stuck in the tax net and I'm pulling hard for everyone who doesn't pay. So that population who's been really hurting, I think this is really good news.
And the bulk of the tax burden does fall just on the 3 crore people.
Yes.
In a nation of
1.81 crore is the number who are taxpayers. 7.5 crore people file returns. Just 2.8 crore people actually pay tax.
So just 2.8 crore people in a country of a billion plus, 1.4 billion, pay taxes, and that enough makes the case for broadening the tax net. It does.
Absolutely.
And there are multiple ways to do it. I want to just come back to the, to personal income tax and ask you whether everyone benefits. Let me tell you why I ask you this question. Great. I mean, if you're earning 1 lakh rupees a month, you shouldn't be paying income tax.
You aren't now.
You aren't now. And you shouldn't be. And you shouldn't have been paying this income tax for the last 3-4 years. I get it. But anyone who's earning above 24 lakhs is not exactly rich. At 24 lakhs or at 30 lakhs, you aren't really raking it in, as it were. There is no pot of gold for you. To have everyone above 24 lakhs paying
above 20 lakh, your savings are 1.1 lakh a year.
But 24 lakhs and above, is 30% fair? Should the 30% have kicked in, say, at 35 or 40 lakhs?
We've had a huge expansion in this. So income above 15 lakh was taxed at 30% till today. And then after this budget, whenever it gets effective, this 15 lakh is now 24 lakh. Right? I think that's a big, big, big jump. So whether this 24 could have been 30, sure. I mean, there's no limit. But I think we should be fairly happy with this increase in the threshold of where your top tax rate kicks in. And also, I want to define the middle class. We all talk about it.
Yeah.
One definition is a price survey, which defines the Indian middle class as a household income of between 5 and 30 lakh.
Correct.
This is well within that band. Whether you take that 24 to 30, debatable. Another 6 lakh, sure, they could have done it. But I think we should just be happy that this... See, they could have just done 1 or 2 lakh. They've bitten the bullet. They've let go of 1 lakh crore of revenue. And they've said, let us see what this middle class does with this money.
So since you've done the math, I can see that. Why don't you just tell our viewers what is the math that you have done? At 20 lakh rupees, you're telling us, what is the tax saving?
It's 1.1 lakh. See, after that, it flattens out. See, what happens is at the lower end of the income, you will pay a increasing. So when you earn, say, 5 lakh rupees, your first 4 lakh is zero tax.
Correct.
On the next lakh, you will pay 5%. Okay. So by the time you get to 20 lakh, your effective tax rate now will be at the margin 25.
Achha,
but your average tax rate will be much lower. So difference between marginal rate and average rate.
So what is my saving if I'm at 2 lakh rupees a month, which is 24 lakhs?
1.1 lakh a year.
But you have that 1.1 lakh saving even for someone earning 50 lakhs.
That's right, because after a while, this will stop kicking in, the escalation. And also after 50 lakh, you have surcharge.
Correct.
So those numbers will start adding up. The surcharge.
Then it's not 30%. The rate actually perks up to something like 34, 35.
39%.
So I have the rates
the
here.
rate perks up to 39%.
50 lakh to 1 crore, it's 34.3. 1 to 2 crore is 35.9. These will also see a revision. We'll have to just look at what the new numbers are. And above 5 crore, it's 39%.
So, Anu, are you telling me that even the super rich get a revision in their taxes?
No, the rates will be the same. The rates, the marginal rate will remain the same. But overall, see, as your income increases, the impact of a lower tax rate on your initial salary becomes smaller and smaller. Your first 24 lakh is a very small part of your 5 crore.
Correct.
So the tax impact of a lower rate on the first 24 lakh is much smaller. Okay, that's how the maths will work.
Okay, Professor Mehrotra, just come in here. One of the reasons that the government wants to put more money in the hand of the salaried class is because people are simply not buying enough. We are in what we call an economic slowdown. I don't have the confidence to go and buy a new expensive air purifier. The air in Delhi may be touching 800, but I will say no, let's hold on. I'm not fully confident on whether I'll have my job tomorrow or not. Does today's move effectively do that? Has it given the middle class the confidence to say, ab main ghari kharid sakta hu. Now I will go and buy the things that I need to buy. Does it boost spending and in turn then the economy?
It will certainly cause some increase in spending because there'll be a higher disposable income. However, we have to look at the macro impact of reducing tax on 31 million people. 31 million people as a proportion of the workforce of 600 million is literally that. That's 5% of the total.
So you're saying it's just 3 crore people or 2.8
That's
crore
right. That's
people
right.
whose lives you have benefited.
That's
but sir, this is the tax-paying
No.
segment of this country.
Please don't misunderstand. Obviously, it's fine that it has been done. You are asking me whether it will be spent or it will be saved and what will be the larger impact. That's what I take away from your question. So I will answer that question as an economist would. You know, I am not as someone who's a tax accountant who would. So let's break this up and see what the macro impact of this is likely to be. And my understanding is that's why I started with the number of, a total of 31 million people, odd people are likely to be impacted, which is 5% of the total workforce. Now the thing is that those in rural areas who were spending and continue to spend actually are not going to be impacted because there's no income tax there. Okay. So who's this impacting? It's impacting only the urban areas, people. Now look at what has happened over the last 7 or 8 years to the middle class. They've been adversely impacted by the rise in joblessness, the slow growth in wages, and the high inflation. So, those with regular jobs, and that's what we are talking about, those with regular jobs. We're not talking about casual workers, we are talking about those who are employers who account for literally 1 or 2% of the total self-employed. Self-employed, they might be 58% of the workforce, but the employers among the self-employed, meaning that dukandar, that you understand, they are barely 2% or less than 2% of that. Forgive me. These people are the 31 million. Now, look at what their spending what has happened to their spending. They had to take gold loans. Significant proportion of them had taken gold loans. Secondly, many of them had gotten burdened because household savings were falling, because jobs were not growing, wages were not growing. So a lot of them were consuming, but they were consuming on the basis of bank loans. In other words, they had taken retail loans from the bank and were paying EMI. So are they going to save or spend? We don't know. We will wait to see how this is going to play out. Some of them will perhaps prepay some of their loans. Some of them will prepay their gold loans, in which case the spending may not increase very much.
Okay.
This is one side of it. On the macro side, Shreya, I'll just finish very quickly. On the macro side, I've looked at the numbers in the budget. What the numbers are saying is the following. That total expenditure of the government budgeted for 25-26 is actually down by 0.1% of GDP. Why is that? Because clearly the government has estimated that because of the personal income tax coming down, its revenues are going to come down. If its revenues come down, that means it's going to be spending less. The government spending falls, 0.1. The other thing is that we don't know to what extent the durable goods that you were talking about. I'll buy an air purifier, I might buy an AC which I was holding on to, or I might buy that motorcycle that I wasn't planning. All of that we don't know. Everything will depend on what level of income you are at.
Okay. I do want to go to Dipanshu, but Dipanshu, just give me a couple of minutes. I have Dr. Shashi Tharoor joining us on the broadcast. Dr. Shashi Tharoor, thank you very much for your time here on Mirror Now. Can I start by asking you what you think of this year's budget? Look, the urban middle class is at least smiling this afternoon, and so are you by the looks of it. But then you're always smiling.
Only if you have a job and the salary and it's around 12 lakhs, yes, you can be happy. But the truth is that the budget does nothing for the vast numbers of unemployed in our country. Sadly, we have large numbers of people who are unfortunately a world record level of unemployment, particularly youth unemployment. We also hold the world record for the college educated unemployed, and there's nothing in the budget that gives them any hope of jobs. In fact, the employment linked incentive schemes that were announced in last year's budget have been stuck. And the government simply couldn't even spend the budget that they announced for 10,000 crores. They spent about 6,000 and change, and they didn't deliver any job opportunities. So they haven't even mentioned it this year. But the problem we have is that there is a very large number of people for whom the key they were looking for is something that will assure them the prospect of jobs. There's nothing there. But yes, you can get good headlines for your Delhi and Bihar elections. In fact, the people of Andhra Pradesh must be feeling hard done by that they didn't have their election this year too. And this is coming, by the way, from a party that wants one nation, one election, which is quite hilarious. Because clearly the message they've sent out now is if your election is going to come after this year's budget, we'll give you freebies this year. If your election is next year, you'll get money next year, etc. I mean, what kind of message is this from the one nation, one election folks? But anyway, we'll have to see. I'm worried about some of the specifics as well, because we'll have to wait for the income tax bill proposed for next week that Mr. Sitharaman mentioned, because we have no idea what the fine print is going to be. Will some of the deductions be changed? Will the traditional approaches to your tax savings become less relevant? Who knows? We'll just have to see. And the other things are the the big ticket items she mentioned. I mean, she mentioned things like India becoming a global hub for toys and the footwear and leather sector getting a big focus product scheme to boost productivity. I mean, big, bold words and promises. But if you look at the actual investment last year, when both these items were under the PLI scheme, in PLI, they had 6,200 crores for electronics and IT. They had 0.01 crore for toys and 0.01 crore for footwear. So suddenly they've got this big headline. I think we'll have to wait and see how it actually works out in practice.
You know, I've seen some of the opposition reactions come in, Dr. Tharoor. They're saying it's a hopeless budget. Even for the middle class, there is nothing. That's not true. There is something here for the middle class. And it's not just for people who earn up till 12 lakh rupees. The benefits will go all the way up to 50 lakh, 60 lakh rupees. At least there will be some saving. And any saving is better than no saving. But I want to ask you whether you have seen any positives in the budget. You are saying there is nothing about generating jobs, which is a concern area for our economy. But the government and the finance minister have spoken about small and medium industries. Quite extensively, might I add.
Yeah, but the problem is, again, in practice, how that's going to work out. I mean, if you look at the fact that there's really no clue where investment's going to come from, we have a stagnant investment climate within the country, and we have FDI leaving the country in droves. So when you've got a situation where in the last year alone, $23,000 millionaires migrated out of India and became NRIs, we are actually worried about whether this government is able to have the kind of approach that will breed the trust that the chief economic advisor talked about in the economic survey as lacking in this country. And that lack of trust is very serious. There's no question about that, because we need absolutely to bring investment before we can do any manufacturing, and we can't need manufacturing before we can generate exports, and we need both before we can talk about meaningful growth. Our growth estimates have already come down from last year this time. The prospect of Viksit Bharat will keep receding if we're unable to grow at a larger percentage than we're growing right now. There may be improvements in their approach. I don't want to be completely sort of raining on their parade, but there are just too many worries about the unaddressed portions of our concerns. And certainly investment is one leading to growth. There's also genuine concern about how do we give people an incentive to invest. As you know, the government's favoring these so-called national champions. And the few companies that are getting monopolies and duopolies in a number of sectors have discouraged other businesses from coming into those sectors, fearing that the investment climate will be tilted in favor of those big guys. Now, the difficulty with all of this is if we don't have investment coming in, we simply won't generate jobs. And jobs go down to the core problem of the way in which this country is hurting. And people, ordinary people, are hurting.
Dr. Tharoor, my last question to you. I know you're in a bit of a rush. There is merit when the opposition says there is a reason why within the first 5 minutes, Bihar was mentioned by Nirmala Sitharaman, the Makhana board, as it were. And then she went on to mention Bihar 6 more times. Of course, there is merit when you say it's linked to the election, which is scheduled. Yeah.
So, I mean,
there is merit in that. Absolute merit in that, because
comes to Bihar.
Bihar goes to the elections. I get that. There's merit to that. But is there any merit when the opposition says that this tax relief is coming right ahead of the Delhi elections? Because honestly, if the government wanted some help, they would have announced this tax relief in 2024. They could have done with help then.
Well, the fact of the matter is that right now, Delhi is one electorate in our country where salaried middle class would account for a larger portion of the electorate than the national electorate as a whole in 24 would have. In the national picture, salaried middle class is sadly a fairly small percentage. I mean, as you know, 63% of our population is still engaged in agriculture. So I think that in the national 24 budget, that wasn't the priority for them. Delhi and Bihar are clearly targeted in this budget with electoral gains in mind, and it is too cynical, honestly. I mean, for a government that is at the same time trying to preach the virtues of one nation, one election, the cynical manipulation of the tax of the budget and the electoral calendar doesn't suggest that the message they're sending is going to encourage people to support one nation, one election. You think Andhra is going to support that now? They want their bite of the cherry as an ally, and they have only witnessed Bihar getting all the spoils.
Okay. Dr. Tharoor, we'll leave it there for the moment. Thank you very much for your time here on Mirror Now. Good to have you.
Thank you, Shreya. Thanks.
Professor Dipanshu Mohan, I'm just coming back to the income tax bit, to the personal income tax bit, because honestly, for our viewers, I think that's the big takeaway from this budget. That's the big headline from this budget. Monika here has quite extensively told us what the finance minister has done actually impacts every taxpayer in this country, not just those who are earning up to 12 lakh rupees, but even those who are earning up to 30 or 50 lakh rupees. I want to ask you whether the extra money we get in our hands will encourage people to go out and spend more. For example, Monika's calculation is that if you are earning, say, 50 lakh rupees, and I'm just looking into her notes since I don't have mine, what you save in terms of income tax is 1.1 lakh rupees. Is that a figure that encourages people to go out and buy more or think big in terms of spending, sir?
Yeah, so Shreya, thank you for having me here, and it's wonderful to be part of an esteemed panel. Professor Mehrotra is here, Monika is here. So I would reiterate to a certain extent of what Professor Mehrotra was saying. The multiplier effect of increased disposable income on growth is a function of two basic things: whether people actually spend that money or save. I have mentioned to you earlier that the household debt position of many low-income households has been precariously high. The 7 to 12 lakh component that we are talking about is falling in the low-middle income group category. So there is definitely, as I said earlier, sigh of relief for low-middle income group. The upper middle income group is not really raking much of the benefits here. Yes, marginally, there might be some changes in terms of saving, but as I was earlier pointing out, that it's all going to be realized in context to what the next 24 months look like. None of this is going to in any way in the immediate or the short term of the next year. And I think the chief economic advisor has already reiterated this, that he's not expecting the growth position to change. Now, what I think is important for us to really understand is that where has the government taken this budget to be different from what the last 10 years was or the last few years was? Is the same government in power. It's the third term. The interesting bit is that demand is mentioned, or boosting demand is mentioned, or consumption is mentioned almost for the first time. It's not it's been said again and again for the last 6 years, since 2016, in fact, that you've had a consumption demand problem. The low income groups have been suffering. So there's something that they have tried to do as undertake course correction this time. Investment, I do not expect a sudden change in the private sector's mindset. If you were to talk to a capital intensive firm, most of them would say that there is less capacity utilization for the money they're investing. The urban consumption demand is weak enough, and that all of those factors matter. At the same time, the four constituents of the finance minister's speech, Garib, farmers, youth, women, I do not see any significant offering. I mean, you have farmers protesting on the MSP issue still yet, and being offered in this budget. I mean, we have to be honest, as Dr. Tharoor pointed out, if you have a higher farming component of your unpaid, group, none of those are getting benefits from the realizations of these announcements. So as much as we might say that there is certain component of a group that would benefit, overall, net, I think the growth benefits of this are not realizable in the next 24 months, at least.
Okay. Can you give me a couple of minutes? I have Manish Tiwari joining us on the broadcast as well. Mr. Tiwari, thank you very much for your time. The big headline for all of us, of course, is personal income tax and the fact that all of us get a little more money in our wallets. That's a good thing, right? That's a positive thing. At least on that, the Congress party will give Nirmala Sitharaman a thumbs up.
Well, I congratulate you for getting a little more money in your budget, in your wallet. So therefore, if that little
Thank
money
you.
makes you happy, so be it. I'm absolutely happy about your happiness.
Little money is better than no money, Mr. Tiwari.
But you
For a
need
poor
to step,
journalist like me, little money is better than no money.
but you need to step back and look at the bigger picture. The fact remains that the fisc still remains in the range of about 15 lakh odd crores. Right. So therefore, the needle on the big numbers has not really moved. Government is still going to borrow 11 lakh crores from the market, which then squeezes out private borrowing. So therefore, if you really want the private sector to invest and create employment, and you're going to squeeze them out of the credit market because government is going to borrow 11 lakh crores, where really are they going to be getting their finances from? That's question number one. Question number two is that the government's total debt has gone up to an astounding 190 lakh odd crores. I mean, it was at about 55 lakh crores 10 years back. You've added almost 140 lakh crores in terms of government debt and liability over the past decade. Now, that is a worrying number. Someone can argue that as a debt to GDP ratio, we are still within the guardrails. But the fact remains that a whopping 140 lakh crores in terms of debt on the government's balance sheet, should worry everybody. And therefore, when I step back and I look at the budget in a holistic perspective, in 2019, Finance Minister had cut the corporate income tax rates very drastically. The effective corporate income tax rate is about 22.5%. But if you look at the rupee, the largest component of where the rupee comes from is from borrowings. The second largest component of where the rupee comes from is personal income tax. Corporate income tax is the third big item on that laundry list. So essentially, this means that over the past 5 or 6 years, the corporate income tax relief which was given has not translated into an augmentation of the government revenues as a consequence of investment and as a consequence of that investment then generating employment and also boosting corporate balance sheets so that they can actually pay back in terms of higher corporate income tax. And that's, for me, a worrying number also.
Okay, no, yesterday the chief economic advisor, though he didn't elaborate on it, did say that corporate India Inc. has let the finance ministry down. But there is a counter argument to the corporate tax argument that you're giving. The counter argument is this: had it not been for the lowering of the corporate tax in 2019, and you can correct me if you want, but had it not been for that lowering from 30% to 22%, we would not have managed during the COVID years. That it would have been economically, we would have been much, much worse. The second argument also given is that corporate India Inc. deserves that tax break simply because they are the ones who are showing appetite for risk. As an individual taxpayer, what is the risk I'm taking? Nothing. But they need to be incentivized, therefore need to be incentivized.
So therefore, unfortunately, that incentive has not worked because the economy over the past 5 years has been driven by government capital expenditure. The private capital expenditure is in the range of about 10 or 11 lakh crores. I mean, if the number is correct from the top of my head. The short point being that if that corporate income tax would have really unleashed the animal spirits of the economy, then you would have had a higher plowback 5 years down the line in terms of returns from the corporate sector to the government's kitty. That's number one. And since you refer to the chief economic advisor, I think the most damning indictment of the governance culture of this government has come from the chief economic advisor, where he has said that the process in India is the punishment, that you are adjudged guilty and you have to prove your innocence which turns jurisprudence completely on its head. And that's why over the past 10 years, you have had a flight of capital. You see, businesses, and business persons have left the country. When this government came in, they talked about capitalism. And today in the budget, you have an announcement that the government is going to resuscitate 2 urea plants in eastern India, and they're going to be setting up another urea plant. Well, all that is very good. But then if private investment was working, it was actually the corporate sector, the private sector, which was supposed to do that. And number two, with all the focus on agriculture, you see, and here lies the dichotomy, that agriculture today is growing at 1.4%, down from almost 4.1%, going by the government's numbers. But if you look at the Manrega budgets, people ready to work on a subsistence wage, it has gone up from 30,000 crores in 2014 to about 90,000 crores last year. I've not looked at the latest number, but it should be, I think, in that range. And the number of person days has gone up from 15 lakh crore person days to 31 lakh crore person days. So therefore, there is obviously no employment even in the agriculture sector, which otherwise statistically was, according to government figures, growing at about 4.1%. So therefore, if you step back, this leaving that personal income tax aside, where you've given relief to people who have, let's say, a salary of 1 lakh rupees a month, well, that's good. But when you look at the macros and when you look at the fundamentals, I don't think the needle has moved at all.
Okay. Mr. Tiwari, we leave it there for the moment. Thank you very much. Thanks for joining us with your perspective. Monika, can I just quickly come to you?
Sure.
We, of course, talk of income tax, right?
Right.
That's personal tax. But as an individual who goes to office, gets a salary, fixed salary, and pays a tax, what you're also paying is GST.
Correct.
Right? So the calculation is that, at least till the last rates were, in place, that 50% of your salary is going into taxes. 50%.
Depends on what you're consuming.
What you're consuming, but mota 30%.
Depends on what you're consuming.
30% you're
At
paying in
a certain
taxes.
level of income, if you're consuming the luxury goods, you can reasonably argue that if your marginal tax rate is very high, it's already at, say, 39%, and then you're consuming luxury goods, true. But the only problem I have with this GST conversation is that till the point GST was not visible on your receipt, you were paying the sales tax, you were paying all these taxes earlier, before GST. These taxes were there. They just were not visible to you. Now they've just become visible in a transparent manner. And what we have in India is a progressive GST rate structure, where for the mass consumer goods, GST is either 0 or 5. And as it goes up the comfort luxury ladder, you start getting taxed higher and higher. So you have that opportunity to consume things which carry a lower GST. If you don't go to a 5-star hotel, you don't pay that high tax. So I just think that the GST conversation sometimes goes a little out of whack, because these were taxes you were paying already earlier.
But Monika, 5% on roti and 12% on parantha.
So again, let me then come back to say that when this was decided that we will have a progressive GST system, a lot of countries will have a flat GST, 15%, whatever that number may be. In their wisdom, the policymakers, and this was a negotiation between
states and the center.
Yes, so this was a collective decision. This is what negotiation is about. In their wisdom, they decided that there's going to be somebody sitting and deciding what gets 5 and what gets 10. And this is a collective decision. So I feel bad when the finance minister goes to this whole popcorn nonsense, because she is not sitting and saying caramel popcorn this month and salty pop. This is a negotiation of the GST Council. So either we as a country say one flat rate, 15% on Mercedes and 15% on bread. Are we okay with that? My sense is we are not going to be okay with that. The minute you have progressivity in your tax, you will have to have somebody or a group of somebodies sitting and deciding what is in 5, what is in 10, what is in 12. And then you will have these things on the margin, which will always become news points. So it's a little unfortunate that we are in this place.
Just give me a number. For an average middle class salaried employee, say someone who is earning 35 lakh
30
rupees.
lakh. The middle class threshold is 30.
Chalo, 30 lakh.
Yeah.
30 lakh.
Yeah.
So, usme you're paying 30% taxes. Plus
Only on the margin. Only on the margin.
I get it. But
Your
overall,
look different.
Overall, what is the tax you're
Between
paying
your
out between
average
personal
and your marginal,
indirect?
there is a difference. Your marginal may be 30,
Huh.
but your average will be lower. It will be lower than that, much lower.
Okay, but if you add the GST that you're paying,
It depends
how much
on
does
your
that
basket
become?
of goods. It depends on what you're consuming. If you're consuming khula atta or branded atta, it makes a difference. Isn't it? I don't know if branded atta has GST, but my larger point is that it depends on your consumption basket, what GST you are paying.
Okay. I do have another question on GST and whether lowering GST rates are also going to help boost consumption, whether it can only depend on, lowering income tax. I'm going to come to you with that question, Professor Mehrotra. Before that, I have to take a very quick break. Do stay with us. Professor Mehrotra, going to the question that I wanted to ask you, if the goal is to have more people to go out and spend money and get the economy moving again, will it only depend on how much income tax we are paying or the decrease in our income tax, or will it even depend on GST and how much GST we pay and if the government decides to lower GST on certain goods?
There are some broad points that I think are necessary in answer to your question. There seems to be an impression that just because some demerit goods like, luxury cars have a higher GST, the GST is supposed to be progressive. It is not. It is actually, it's an indirect tax. Indirect taxes are largely paid by those who have lower incomes. Let me give you the breakup of how the GST burden falls, on who. 64% of total GST contributions come from the bottom 50% of the consumption people, of people who consume less than 50% of the total. 33% comes from the middle 40% of the population, and the top 10% of the population contributes only to 3% of GST, which is hardly surprising because the better off people, obviously, they spend, their marginal propensity to consume is much lower than that of the poor. This is one issue. The other issue, of course, is that there is a profound difficulty with the way the GST is structured. It should never have been structured the way it is. There is no country in the world, large country like ours, which has such a complicated rate structure for goods and services tax. We should have never had 5 or more rates. We should have had at most 3 rates, which would have simplified. It would have enhanced compliance. If you got compliance, today there are plenty of people who will duck the GST also and get kacha receipt and not pay the GST because the GST rates on some items are just excruciatingly high. 18% is very high. So you should have a 5%, 12%, 18%, but 18% must be on an extremely small share of products. Now, when that, obviously, this is going to, those who are going to spend are going to spend and pay GST. But it's very difficult to estimate in advance how it will impact government revenues. What I've told you is that's going to impact the consumptions, people who are in the different income brackets in the way that I explained. So, it impacts the less well-off much worse because it's an indirect tax. That's the way it is.
Okay. Thank you so much, Professor Mehrotra, for being with us. Monika, thank you very much. And Professor Dipanshu, thank you very much for being with us as well. I'm slipping into a quick break. Amitabh Kant is joining us up next. Do stay with us.